Hello everyone, welcome back to Nandhuz Equity. The famous Ramdev Agarwal of Motilal Oswal has made the Bruised blue chip, the concept of Bruised blue chip, very famous in 2024. Today we are going to see what is blue chip and what is Bruised blue chip in that, and how to identify Bruised blue chip stocks using screener, and also based on the 10 top stocks that are already bruised and kind of healing, and we are going to review them. So what is blue chip company? Blue chip is the word that is used for the chips in the poker game, which is denoting the highest value of the coin. So same thing when it comes to companies that are quite expensive or even gone with high value and most sought in the market, those are called blue chip company. So blue chips are mostly having long-term growth. Their profitability, sales, operating profit, everything is on a higher side on a consistent manner. So that's why they are called blue chip companies. So what is Bruised blue chip company? So when these companies go down for some reason, it could be any reason, and despite having market leadership and all that, when it goes down and particularly it goes below 50%, that is what is called Bruised blue chip company. Nobody exactly knows who really coined the word Bruised blue chip, but in India, Ramdev Agarwal from Motilal Oswal made it very popular. And in fact, last year he started using this several times in interviews and also some of the articles. And in fact, they have come up with a 5 years wealth creators, like a list of companies that created wealth in the last 5 years. In that they have identified some of the companies that are highly bruised and they are great blue chips to enter. So that is how this has become very popular. So Bruised blue chip means blue chip company that has fallen more than 50% is a clear criteria. So what is the criteria for identifying Bruised blue chips? Definitely blue chips that are gone down, but they still should have clear market leadership. Good example is Asian Paints. It has been going very low now, but despite that it is having its market leadership. And then there could be some temporary setbacks, and despite that it should still have strong fundamentals. And of course significant price correction, as I mentioned, it should be more than 50%. And potential catalyst for recovery, meaning it should again recover very soon in a very enormous way, so that whatever we are investing can become a multi-bagger. As I mentioned, Motilal Oswal has come up with the various different articles. In one of them, how to pick the right Bruised blue chip, they have explained for maximum gains. And of course, this is a rare opportunity to invest in fundamentally strong companies because they are deeply discounted at valuation. I have included the links to these articles in the description. You can always refer back. And we also want to know how to invest in Bruised blue chip. So we need to definitely conduct thorough research to understand what is the reason that really made these companies go into such a crash, and focus on turnaround stories. Sometime that would have already gone down 50-60% and then it would be healing and recovering. We need to check that. And this could be a right opportunity to invest. However, we cannot put all money into one Bruised blue chip. And of course, patience pays off. When we select Bruised blue chip, we cannot really check back the next day whether it is going up. And of course, all the key metrics we need to monitor. I'm going to include them in the formula, and we can also learn from past examples. Good example is Tata Motors. Like it went up to crashed up to the 150 level some time ago, and then it came back again to 1000 level. Then again now it has gone to 700 level. This is a very good interesting stock, but it is not yet completely bruised. Like similarly, Asian Paints now, because of heavy competition and also losing little bit of market share, is a very good candidate for a Bruised blue chip. In terms of screener, the formula is very simple. We just do not want to take anything less than 10,000 in terms of market capital. But generally, when we say blue chip, they are mostly large cap, so it should be more than 20,000. But now many stocks have not come that badly down, like by almost 50% or less. So that's why I have picked more than 10,000. And the second line is very important. The current price should be less than the all-time high of 50% of that. So you can always modify that and even identify whatever is at 30% discount or 70% discount. Those things you can always change and optimize. Of course, the other parameters like ROE, ROCE, sales and growth for 5 years, even you can use P ratio and PEG ratio so that you can find the right entry point. When I ran the query, I got more than 20 stocks. So from that, I have picked top 10. So the first one in our list is Oil India. You know very well, Oil India is an upstream oil production company, very unique in terms of its production and of course with high demands currently. And globally, oil demand is still there, but price is quite fluctuating. In fact, it is coming down. So its value, that's the reason, is going down. And of course, available quite cheaper from PE and PEG ratio. This is also came in many other filters when we checked in the past, like multi-baggers, long-term undervalued stocks. Many of those parameters also meeting. So it's a very clear winner. Already available 41%, down from its all-time high. The second stock is Ircon. You know Ircon very well as part of the railways pick, and currently available almost 45% down from its all-time high. And look at its P ratio, definitely less than industry PE. PEG ratio is gradually more than 1, so you need to wait. And of course, all the ROE, ROC and its fundamentals are intact. Star Health Insurance is the third company in a Bruised blue chip companies, where it is available 51% cheaper from its all-time high. And of course, which is also cheaper compared to its peer from a PEG ratio, P ratio perspective. I'm talking about only private insurance companies. We have seen this company in our past videos, IndiaMart, Intermesh, definitely available quite cheaper from its all-time high, 53% down. And of course, having a very strong fundamentals, currently available even from a PEG ratio perspective, quite cheaper. IEX or Indian Energy Exchange is another company that has crashed quite a bit, like it has crashed close to 50% now. Of course, not available cheaper from PE and PEG ratio perspective. We need to keep this in watch list. Earning per share is little bit of a worrying factor, quite low, but however ROE, ROC is very good. So current price at 168 level, I am still hoping that this might further crash down to 150 level. Gordon Reach is another company where it has gone quite high because of the defense sector that was going quite high. It was going with all the other defense stocks. So now it is available about 48% cheaper than its all-time high. And of course, I still feel that this might further go down because its PEG ratio is still not cheaper. And EPS, ROE, ROC, all those fundamentals are great. However, because of the current market condition, I am expecting this to go further down. Another railway stock, Titagarh Rail, where it is available cheaper from a PEG ratio perspective, not from a P ratio perspective, and of course down from all-time high about 45%. So we can definitely keep this in our watch list. Eighth stock in our list is Tata Elxsi, definitely a great blue chip company, available cheaper by 44% from its all-time high. However, PEG ratio is still above 2, so I'm still thinking that this might further slide down to 5000 level, so that will be a good time to enter by then. However, I would like you to keep this in your watch list. Again, this is not a buy or sell recommendation. Clean Science, again available 48% to 50% closer, cheaper from its all-time high at 1400 level. Definitely strong fundamentals, and only thing is P ratio and PEG ratio still expensive. This might further go down. Before Waaree Energies was listed last year, Waaree Renewable Technology was the hot stock during that time, and after Waaree Energies got listed, this stock started sliding, and now it has slided almost 61%. So these are all like highly hyped companies during that time. However, it has a very significant market share and currently available at PEG ratio 0.26, which is kind of showing it has a huge growth potential, but price has come down. So because of the nature, the PE ratio is still at 62 because there may not be much competition for these kind of companies. So still a good candidate for Bruised blue chip companies. So thanks for watching. If you find this video to be useful to you, click the like button. And of course, none of these 10 stocks are buy or sell recommendation. And you can always use this formula to run. This is a dynamic formula where you can always find some other blue chip that is going down further and you can add to your watch list. So this query definitely can help. You can optimize changing the percentage also. So try it out. Thank you.